The words stocks on sale carry a special allure for some investors because it represents the chance to acquire shares of some exceptional companies at discounted prices, paving the way for substantial returns. Today, we're going to uncover some undervalued gems that deserve your attention, but you better hurry. Let's get into it. Chris, Thomas, thanks for joining me again today. If you know me, I've mentioned it before. I love a good sale, and that's stocks included. So I'm excited to learn more about the stocks we're going to share today. But first, I want to know how you guys are approaching this. So what are some of the key indicators or signals that can help investors identify stocks that are currently trading at discounting prices?
Lacey, you and I have done enough of these. I tend to approach stocks from more of a fundamental analysis point of view. So two things I look at is price to earnings ratio, which it's not a perfect metric. I understand that, but it's one of the better ones we have. So I look for stocks that are trading at or slightly below where the S&P 500 is, the average of the S&P 500, which right now I think is around 22 times earnings. And then I also look at stocks that are trading towards the low end of their 52-week range, because that generally can speak, if analysts are bullish on the stock, if you can find stocks that are trading at the low end of the range, there's some opportunity there for growth. MarketBeat has tools that every investor can use that can help point them to stocks that are both have low PE ratios relative to the broader market, and also stocks that are trading near their 52-week lows.
Right. Like Chris says, it's relative. The stock trades relative to its own price. It can be high or low within a range, trending or not trending, but also relative to its peers and to the broader market. So you look at P&Es and make sure that the one, is it lower than the broad market, but is it also lower than its peers? Because sometimes an entire sector can trade at a discount, but you want to find the stock within the sector that trades at a discount to its peers. But one trap, though, is undervalued stocks might be that way for a reason. They might not be producing as much growth. They might not have as much dividend. They might not be paying out as much of their earnings in dividends. So there are some other factors at play that need to be investigated.
All right, Thomas, let's jump into the exciting stuff. We want to know the insider scoop here. What are some of the stocks on sale that have caught your eye recently?
Well, Home Depot is one. It's been trading within a range for the last few quarters. The declining consumer outlook has been weighing on share prices. It just kicked off the earnings season with a pretty weak report and gave weak guidance, and shares fell because of it. Looking forward, I don't think the bad times are over, but what's really happening is normalization compared to the COVID peaks. We're returning to a long-term trend, and I think a major buy opportunity is setting up for this stock. It's already showing some support on the charts now, but we may already be at the bottom, but I think it will probably continue to trend sideways for another quarter or two until we get some more clarity on the economy.
All right, Thomas, you had mentioned that the bad... Go ahead.
Oh, I'm sorry, Lacey. I was just going to ask Thomas, Thomas, I think it was interesting because I saw the Home Depot earnings report and it was a disaster. But then I also noticed the price of Lowe's hasn't been moving much. In fact, if anything, Lowe's took a little hit, and then now Lowe's is kind of back up around where it's been. So, I don't know.
There's an interesting disparity in the valuation between Home Depot and Lowe's, and I can't really put my finger on it. Lowe's trades at a cheaper valuation, so the weakness may already be priced into the market naturally. And I think maybe it's because Lowe's is seen more of the blue chip operator, where Home Depot was more of the flashy name, more of the growth operator, which is kind of a weird way to look at them because they're both really large companies. But like you say, Chris, there's definitely a disparity between these two stocks. I'm interested to see what comes out in Lowe's report next week.
All right, I was just going to say how you had mentioned that bad times aren't over yet, Thomas. So that made me think, what are the red flags or warning signs for investors that they need to watch out for when they're considering stocks that appear to be on sale?
Well, in the case of Lowe's right now, it's going on sale because of the weak guidance. And the weakness is really in Q2. They reaffirmed guidance for the full year. So the risk here is that we'll get into Q2 and they'll lower guidance again, and the next quarter will be weak. So instead of getting that full year outlook that we think is going to be at this level right now, it's just going to slowly ratchet down as the year goes on, and that would weigh on prices. So what you want to look for is that there's a reason for the discount, but there needs to be a path forward. There needs to be an exit strategy for the company to be able to regain whatever it is that it lost to cause the valuation decline.
All right, that's good to know. So let's move back to your other picks. If you have more, what are those?
Let's see. I think Oxy was next on my list. It gave another tepid report. Shares move lower, but the real takeaways from the report is that cash flow is robust. The balance sheet is improving. They're reworking the capital structure to be in favor of shareholders. They increased the dividend recently. They're buying back shares. But most importantly, I think this pullback in share prices put the stock in what I'm calling the Buffett buy zone. That is the price level where Warren Buffett stopped buying the shares in the spring of last year when he drove the price up. And it's where he has been buying shares each time it pulls back. So I think that this is as good a time to buy Oxy as any.
All right, Thomas, I know I'm asking for your picks, but I've been watching this stock since we did a video on it a while back. So I'm sure you're going to have something to say about it here. So what about Kraft?
Kraft, right. So I'm kind of surprised that it's been pulling back the way that it has been. It popped in the wake of the results, but it's definitely pulled back more than it gained. But it gave a great report. It guided higher. It's showing pricing power. Margins are improving. Earnings are good. It's going to have plenty of cash flow. The yield and the value are still there. It's in the middle of its turnaround. And I mean, to me, this is a very good buying opportunity in Kraft. And one thing that I want to point out is that the analyst sentiment is improving, and that's helping to firm the floor in the share prices. And even the analysts that aren't really on board the bullish case now see the bullish case developing, because the takeaway is that it's not really worth a multiple expansion today, but in another 2 quarters or 4 quarters, it will be. Mm-hmm. So that makes today the buying opportunity. You have to buy it now before those results come out, or then it will be too late.
All right. So are there specific sectors or industries that tend to offer more opportunities for finding stocks on sale? Chris, maybe you can speak to this. Is that how that works, or is it just kind of if it's there, it's there?
It's probably a little bit of both. I think most stocks tend to be cyclical in nature, so you can kind of get a hint of the way things are moving in the economy. Kind of points you to the sectors where some stocks may be undervalued right now, but they're going to pick up. They're going to be some of the better performing stocks later. I think at the beginning of the pandemic, I think that was a good example. You had certain industries, cruise lines come to mind, that were just, the stocks were just obliterated. But if you were a patient investor and you had the time and the capital to put into the stocks, that was a great buying opportunity, because you knew, or at least you suspected, that the industry wasn't going to stay down for long. And that's been a great example of, if you bought into some of those stocks at that price, those stocks are up significantly then. So yes, sometimes it is just what it is, but I think other times you can get hints from what's going on in the overall economy.
Right. Kind of to expand on that, I mean, there are sectors within the market that tend to trade at a value to the average S&P 500 value. Some are more expensive, some are less expensive, but even within the more expensive sectors, you can still find values. It just depends on the market sentiment and how the companies are doing relative to that sector.
All right, Chris, I want to hear what stock sales that you're looking at. But this conversation has me thinking, what role does market sentiment play in determining whether a stock is a sale or if it's simply facing a temporary market downturn?
I think Thomas just kind of alluded to it in his response to the last question. I think it's huge. I think you can just look at some stocks that there doesn't seem to be necessarily a rhyme or a reason for it, but the stock just tends to be either analysts just don't really like the stock, or the retail investors just don't really like the stock. But market sentiment does play a role. I mean, there's just It's undeniable. And again, I think that's where, if you're doing your due diligence as an investor, there are times when you can just say, you know what you own, you know that the fundamentals of this company are good, and you just kind of have to have the patience to ride it out and get to those better times.
Right. It just comes down to being like a smart investor. You want to know what it is you're buying into. I've said this before, maybe in our videos. I know I say it to Don. You have to know what normal days look like to know what abnormal days look like. So, I mean, today the stock is down 5%, but is that normal or abnormal? Some assets trade in wide ranges, So knowing what normal is the key to knowing what abnormal is. When abnormal presents itself, that could be a good time to buy.
Makes perfect sense. All right, Chris, on to your picks. What do you have for us?
Okay, so I took a little bit of a different approach. I just came up, I tried to find one large cap stock, one mid cap stock, one small cap stock. I think it was more to amuse myself than anything else. So for the large cap pick, I'm also kind of going where Thomas went. I'm going into the oil stocks, but I'm looking at ExxonMobil. Again, extremely attractive price to earnings ratio, great dividend. There's talk that as part of the debt ceiling negotiations, there's going to be some opening up of leasing within the United States. I don't know where that's going, but there seems to be a growing sentiment that we've maybe pulled too far back as far as drilling in the United States. That could be changing. Oil is looking like it's starting to have a floor in the 70s. It's only going to be ready to go up. All of those things are bullish for oil stocks. And I think that, again, if you're going to look at oil stocks, ExxonMobil is certainly a great choice to have.
Yeah, I think energy is a good cash flow producing sector right now. Dividends and value are pretty much there.
Yep.
All right, and what's the mid cap stock you're looking at?
So for mid cap, I'm looking at Advanced Auto Parts. I know Thomas has written about this before. I've written about it for MarketBeat as well. This is one that 14 times earnings, so it's attractively valued there. It's got a 4.9% dividend yield, which is very good. Here's the story here. As long as inflation remains sticky, both new and even used auto prices are going to stay high. Many consumers are going to be priced out of the market. And even those consumers that might say they can buy a car are going to be looking to hold off on that for as long as possible. That means they're going to be looking to keep their existing car in good working order. That's bullish for Advanced Auto Parts. In the last read on PPI, it showed that auto parts prices were rising, and Advanced Auto Parts said in their last earnings report that they were confident that they can absorb the consumer can absorb the costs because of the infrequent nature of the purchases. So once you repair something in a car, it tends to last a little while longer. So consumers are willing to pay up to get that, because again, they're making that cost benefit analysis of, if I repair my car versus having to buy a car and now I'm into those payments for a while. So like Advanced Auto Parts here.
I like Advanced Auto Parts because it was like a year or two ago, they started paying their dividends, and they've committed to a dividend growth strategy, like a capital return strategy. They pretty much said, maybe not in so many words, we're going to be a dividend aristocrat. So investors that have, 10, 20 years to hold on to this stock should put some money into it, because this thing is going up and it's going to pay you to hold it the whole time.
All right. And the small cap company you're looking at?
So the small cap company I'm looking at is Hibbett. It's a little contrarian, since sporting goods and athletic wear are considered discretionary purchases. But I have to admit here, analysts love this stock. It's trading at just over 5 times earnings, so that's a very attractive valuation. Earnings are expected to grow by 14% this year. So you've kind of got a little bit of, like I said, it's a contrarian pick in terms of where the market sentiment seems to be. But analysts love the stock, and with 14% earnings growth in a year where we're expecting earnings contract, you kind of can't go wrong there. And it's even got a dividend yield of about 1.8%. So a lot to like about this stock if you're willing to buy into the notion that it might be a little bit contrarian.
I mean, I like that name too. The sporting goods sector has been doing pretty well for the last couple of years, not just because of the pandemic. It's carried through right through the pandemic. People just like to be outside, and it does give a value compared to Dick's, and it's got some yield. So yeah, that's a good pick too, Chris. I like that one.
Definitely some intriguing picks here, guys. I love the variety of the insights you've shared. I think our main takeaway here is that stocks on sale may require some time to bounce back, but if you've done your homework, you believe in the company's potential, staying the course can definitely lead to significant rewards. All right, everyone, stay tuned for more stock analysis. Until next time, happy investing.